we're still reading about monthly debt obligations, and today we're going to be reading about loans secured by financial assets. Loans secured by financial assets. When a borrower uses his or her financial assets, life insurance policies, 401k accounts, individual retirement accounts, certificate of deposits, stocks, bonds, etc., as security for a loan, the borrower has a contingent liability. What that means is if you've got let's say you've got a whole life insurance policy with a $240,000 actual cash value, and you borrowed $40,000 from it to buy a car. That is the contingent liability. There's a liability contingent on that actual cash value of your life insurance policy, and let's say you're making $600 a month payments towards that loan. The lender's not required to include this contingent liability. That $600 a month, we don't have to count that in your liabilities as part of the borrower's recurring monthly debt obligations, provided the lender obtains a copy of the applicable loan instrument that shows the borrower's financial asset as collateral for the loan. If the borrower intends to use the same asset to satisfy financial reserve requirements, the lender must reduce the value of the asset, the account balance in most cases, by the proceeds from the secured loan and any related fees to determine whether the borrower has sufficient reserves. If you have put in the reserves that they have a $240,000 loan, a $240,000 life insurance policy, and you're counting that as reserves, you got to delete that and put it back in as $200 because they've got a $40,000 outstanding loan against that $240. So they can only use $200 of it as reserves. I hope that makes sense. Comment, question, communicate with me. We'll figure out ways to make sure we understand this. Now, understand that this is not applicable to Bitcoin or Chime. What are the other coins? Ethereum. And so let's say you've got some kind of virtual currency, some kind of digital currency. I'm not using the right terms, but you cannot use those as reserves. You cannot use those as to not count the debt. So let's say you own so much money in Bitcoin, and you've borrowed against your Bitcoin, and you're making payments to pay that Bitcoin back. Those payments count. We have to count those in your debt because the banking world is not really giving any credit to virtual currency at this point. Let's say you got a 30-day charge account. It's an open 30-day charge account, and it's required to be paid in full every month. Fannie Mae does not require open 30-day charge accounts to be included in the debt to income ratio, so you don't have to count that. This section about other real estate owned, we're going to have to make that its own video later. Again, I'm with Churchill Mortgage. Churchill Mortgage is my lender of choice, my employer of choice. I love it because we're an ESOP. I'm interested in you. If you are looking for a great place to work, reach out to me, especially if you're in North Carolina. I would love to open some more branches across this state.